Okay, here's our agenda for today. So first off, I'm going to give you guys a link to this presentation. So here is the link I'm going to put into the chat. Dayton says, pause trading for 2 years, doing my corporate job, hoping to get back into it. Awesome, very cool. I think this is a great way to get back into it for sure. Okay, so I sent you guys a link to the presentation. It is inside the chat right now. So if you guys want to follow along with anything that I'm doing right now, or if you guys want to go into any links or anything like that, that presentation link is there and you can access it and do whatever you need to do. All right. Next in the agenda, I'm going to tell you a little bit about myself so you kind of know where this is coming from and why should you care, right? We'll talk about Lumi Wealth a little bit, what we're up to. I'll give you guys some helpful links. Then we'll go into a little intro on algo trading and why we're such proponents of this, right? You probably feel the same way. But let's talk about the whole shebang of it. Then we'll show you guys a few strategy examples. This is by no means all of our strategies. There's a lot of strategies that we have. We're big proponents of using multiple algorithms all at the same time. I don't think using one algorithm is a good idea. I think diversifying is a very good idea. So I'll show you guys a few different strategies that we have. But this is by no means all of them, right? We literally have I think almost like 100 strategies at this point, right? But there's definitely quite a few. But I'll show you a couple of them, some of our more interesting ones, I think, or at least mixing them up. All right, and then we'll talk about how to continue your learning. We have some new products today, by the way. If you've been on this kind of thing before, I could show you some new products that we have today that I think you'll find very exciting. Actually, we're going to do an entire presentation just on that in a week from now, but I'll give you a nice little sneak peek. And then I have questions at the end. However, keep in mind you can ask questions throughout the entire presentation. It's actually more interesting when you ask questions throughout. So you can ask questions at the end. We'll have time for that, but feel free to ask throughout if you have a question for anything that we go through. All right. Okay, so let's kick it off. So first of all, let me tell you a little bit about myself. All right. So I've been programming. First of all, it's myself that's teaching this class. So you might want to, why do you want to learn about that, right? But anyway, so yeah, so I've been programming for over 25 years. Started when I was very, very young. It was something like 25 or sorry, something like 12 years old when I got started. Very, kind of interested in building websites, played too many video games, kind of got into that, right? So it's been a while now. I have a master's in finance degree that I completed a while ago. So definitely have a decent amount of that academic background in finance. But then really that kind of got eclipsed by working on Wall Street for a number of years. I moved to New York after we sold our first company. So we built a company, we sold it at a bunch of money, basically just took some time off and went to go travel and really found myself in New York City. It was a great place, for someone who's really enthusiastic about finance. I don't know if you guys live there, but it is a fantastic city. I moved back to Toronto just to be around family, but still miss it all the time. Yeah, I got a good chance to learn a lot of things on Wall Street, worked at a few different types of companies, work with people that were literally billionaires, a lot of very good things to learn from people like that. But yeah, I got a chance to spend a lot of time there. During that whole escapade living in New York, I got a chance to work at a company called Voyager. You may have heard of it if you're into crypto. These days, the company, got hit by Three Arrows Capital when things imploded in the crypto market. But before that, I started at Voyager, employee number 4. Basically, we started up in a little WeWork. We went from a 4-person company very quickly to 50-person company. We got a lot of financing. The guys behind Uber actually invested us. I got to meet a lot of the founders of Uber and some other really great people, investors, that sort of thing. We grew that company from, like I said, 4 people to 50 and maybe even larger after that, because I decided to go off and start my own company at some point. But we went from this tiny little company to a $3 billion company. We were trading publicly on the stock exchange. You were able to buy our stock, did very, very well up until, like I said, the crypto crash in 21, was it 22? But definitely worked out quite well for that situation. And now working on Lumi Wealth, which is our new company. What you're seeing here now, I'm going to talk a little bit more about it. But essentially founded Lumi Wealth about 4 years ago, and we're working on some pretty cool stuff that I think you'd be very interested in. So what is Lumi Wealth, you might ask, right? Well, like I said, we were founded in 2019. Why did we build this company? Well, we build it to help people invest better, right? Which means higher returns, lower risk. I think a lot of people forget that second part. Most people focus on the higher returns. You'll probably see a lot of those YouTube videos out there, make 1,000% in a year or something like that. We are not those people. We would like to make you sustainable. We're not financial advisors, but I would wish upon you to have a more stable long-term income, right? Rather than trying to follow the next fad on YouTube, investing, some crazy amount of money into something extremely risky. We are more of the mind that we want to be building our wealth over time, and we want to do this in such a way that's sustainable and long-term, right? So that's why we created this company. We strongly believe that we can, or what we're working towards is to help people invest better, right? So how do we plan on doing this? What is the difference between us and a lot of other companies doing similar things, right? Well, we want to do this using software and AI, right? It's been our focus from day one. And the reason why we do this is because it's smarter, cheaper, and faster, right? When you use software to trade for you, as opposed to you doing this by yourself, it's going to tend to be making much smarter decisions, especially these days with the advent of AI. We can factor in literally 10,000 times more information than you can read in a day, right? Literally. It's a lot cheaper because you don't have to pay any kind of fund managers, right? We could optimize algorithms to do the right type of thing. And it's faster because, I don't know when the last time you were able to place 100 trades in a second. I don't think anyone in this room could do that, but a computer can, right? So these are the reasons why, we're really into software and AI, and it's how we plan to make this vision of helping people invest better work out, right? So what are we doing specifically right now around that? Well, we have courses on algorithmic trading and other things, right? This is kind of what you're watching right now. And we are building software to make it even easier to create these investing algorithms, right? We are, I'd say, first and foremost, a software company, and we want to make this really, really easy. I'll tell you guys a little bit about some things that we're building down the pipe. Like I said, we're starting to work with a bunch of different banks across the US and Canada. So there's a lot of really cool things that we're working on. All right, cool. So that's about myself and Lumi Wealth. I promised you guys some helpful links. So here's a few of them. First of all, there's our YouTube page. I'm going to throw this into the chat. And our YouTube page has a lot of free content on it. If you guys want to learn about algo trading, you guys want to see some of our strategies, you want to see some interviews that we've conducted with a bunch of different CEOs and people in the space. For example, here is an interview with myself and John Ewing. He manages a $600 million hedge fund. We have Tony Ning here that I interviewed, who's really big in the real estate space. We have Cliff Frazier here, who's runs a $200 million real estate company. And there's a bunch of other ones here around crypto and a few other things. If you want to check it out, there's a bunch of good interviews in there. There's testimonials by some of our past students. If you want to see kind of what their experiences were, there's lots of them in here, right? And then there's, a bunch of other videos on all sorts of different things, right? So lots of good stuff in here. Check us out. I put that link out there, youtube.com/LumiWealth, basically, or lumiwealth.com/c/LumiWealth, I guess. And when you guys are here, by the way, make sure you guys like and subscribe. It sounds like one of those YouTube people, but for real though, like and subscribe to our channel because we release a lot of free content, a lot of good stuff that I think you will like. And if you're subscribed and you're getting that bell going off, you're going to get that content first, and you're going to see a lot of the cool things that we put out. Okay, cool. So that's first of all, that's our YouTube channel. Second of all, I want to tell you about our Discord server. This is a great way to join our community. You want to get to know what everyone is up to. This is the way to do it. Our Discord channel is, or Discord, I should say, server is, huge. We have tons of people on here talking about everything to do with trading, specifically algorithmic trading, right? We have different channels in here talking about our software, LumiBot. People are making that thing better every day. We have our alumni in here that talk about some past strategies that they're doing. For example, here's one of our instructors, Guy Porter, talking about a new strategy that he's building. We have channels associated with each one of our courses that we do long term. Here's, for example, our live algo hour course. So it's $200 a month. And basically we build algorithms every single week, like a new one every single week. We have a large group of people who basically keep creating that stuff. Here's an algorithm that we built, for example, for Forex, or we're currently in the process of building. We back tested it over the June period and made 91% in a month. Pretty damn good. We're still working on this one, but had some pretty good results with that. If you scroll up here, you'll see some of the other stuff that we were working on. Here's one algorithm that we're trading. This is an AI-based algorithm that uses the news and ChatGPT. So basically goes to ChatGPT and says, hey, was this good news for Apple or not? And if it says it was good news, then we buy it. If it says it was bad news, we don't buy it, right? Potentially we could even do some short selling. But this algorithm had a pretty impressive back test as well. If you take a look at this one, we made in these few months 220% from January to June. That's what our back test showed. So pretty damn good for a couple months. Again, these are all things that we're working on. This one actually did even better, 300% over the same time period, right? But anyways, if you join our Discord channel, you can kind of see like a lot of things that are going on in our community. What's everyone talking about? What are things happening? Right. So I suggest that you join. Really, it's probably one of the best ways to stay connected to our company, to Lumi Wealth and algo trading in general. And then if you guys want to schedule a call, and I strongly suggest that you do, here is the book to schedule a call, or the link to schedule a call. Basically, you'll get a chance to speak with someone on our team who can help you through this whole process, right? You want to start building your own trading algorithms. How do you want to do that? Well, this link is going to put you in touch with someone that can help you on that process, right? Cool. Awesome. All right. So those are 3 links that I want to share with you. Let's continue on to the next section. Let me know if you guys have any questions throughout. Okay. So let's talk about algorithmic trading for a second, right? So for those of you that are here, I hope that you're here for the right reasons. You're here because you believe in the future of trading that's automated. If you're someone who thinks that human beings should be placing every single trade that they do, maybe this isn't the right place for you, right? What we're about is we're all about automating trades. We're about making things happen without human intervention, right? And that's what algo trading is. Let's talk about why we think that, right? So first of all, algo trading is using software to analyze data and automatically make trades, right? So basically trading robots, right? That's what we do. We build trading robots. I speak to someone in the elevator. They're like, oh, what do you do? We build trading robots. We automate investing, right? That's what algorithmic trading is, right? So a simple way to think about it is investing is all about making smart decisions, right? So what makes you a good investor? It means that you picked the right things, you invested in the right things, and you're able to stick through it, right? Well, imagine how much better you could be if you had the power of AI and data science backing you, right? Instead of you saying, I think this is the case, or even if you're a financial advisor or financial analyst analyzing a company, going through it, that takes a lot of work, right? It takes a lot of work to analyze a company, to understand what you should be investing in, to understand your risk metrics, all that kind of thing. It's a lot of work, and software, data, and AI can help very significantly with that, right? It means that You can do 1,000 times more data. It means you can back test and check all these different ideas that you have. You could be a lot more regimented about things. You're not going to be as emotional about things because the software is doing it for you as opposed to you doing it yourself, right? A lot of people, they tend to get trapped in the idea of, oh, this company dropped and I need to sell it, right? Or something along those lines because you get emotional, right? AI, software, that doesn't happen, right? Okay, so we're using software to analyze data. We want to make it smarter, right? Smarter, faster, all that kind of stuff, right? But let's say you're looking at that, okay, that sounds reasonable, right? But where's the evidence of companies that are doing this that are successful? Well, there's a lot of them. And actually, if you look at hedge funds in terms of success metrics, you will find that the hedge funds that use data science and use software to automate things are doing a heck of a lot better than the hedge funds that are not. Surprise, surprise, basically the same thing that's happening in the corporate world, right? All the companies that embraced putting out an app and automating things, that sort of stuff, those companies are doing better, right? The companies that said, screw technology, I don't want to do this stuff, they're either bankrupt at this point or probably not doing so well, right? It's the same thing in the investing world, right? It makes sense, right? Cheaper, better, faster, right? You're able to get more information, make better decisions for less effort, less time, less money, right? Okay, so let's talk about a couple examples of this, right? I think the quintessential example is a company called Renaissance Technologies. If you haven't heard of them, Google it. They are probably the most successful hedge fund in all of history ever, right? They make a lot of money, and they made the founder, Jim Simmons, extremely rich, right? If you look this guy up, Jim Simmons, he's on the Forbes list. He is, I think, last time I checked, number 30 or number 40 richest person on earth, right? Did quite well for himself, right? There's a really good book on him called The Man Who Solved the Market. I'm going to share this link with you guys because it is a really good book if you're interested in this topic. So basically, this book talks about Jim Simmons and his whole journey, right? He was a mathematician, right? Really into like data and that kind of stuff, right? And this was back in maybe the 70s or the 80s when computers kind of just started coming out, right? There's like a new thing, Windows wasn't even really around back then. But he had the idea of, what if I can take all my math knowledge and teach it to a computer and get it to trade for me? How would that do? He had this belief that this thing would make better decisions than people, right? Or at least make him a lot of money, right? So they started this hedge fund. A year goes by, they're still kind of trying to figure it out. They're sort of starting to make money after a year, right? And keep in mind, by the way, this is back in like the 80s. It was really, really hard to do this stuff. These days, we have really good tools for you. If you're interested in this kind of stuff, we've built a lot of different tooling for you to make it easier. And not only that, but there's better computers now. Everything's faster. Python is a fantastic language, right? So it's a lot easier to do this stuff now than it was back then. But back then they were doing this. They spent a year. They were kind of starting to make some money. Jim Simmons got a little frustrated and got really involved in it. He fired a CEO and got like really involved in the business. And all of a sudden they start taking off, right? And what I mean by taking off is these guys start making an insane amount of money, right? These guys are able to double, triple investors' returns in very short time periods. And they just start getting investors coming in like crazy, right? Because they're able to do this stuff. Not only were they able to make a lot of money for their investors, right? But they made it in such a way that was risk adjusted well, right? So it's not like if you guys want to get rich fast, right? You could go out and basically gamble, right? Like you can gamble in the stock market. You could buy a call option tomorrow that the S&P is going to go up by a certain amount. If you're right, you can get 10 times your money in like a day, right? That's possible, right? However, that comes with a lot of risk, right? You're going to win some of them and you're going to lose some of them, right? There's intelligent ways to play that, right? And we could talk about that with some of our algorithms, right? But generally speaking, you're just taking on a lot of risk, right? And eventually you're just going to blow up, right? What these guys figured out is how can I make a lot of money without taking crazy risks? These guys were able to very consistently make very high returns even in bad years, things like 2008, they still did very well, right? Things like the year 2000, when the stock market crashed for the tech bubbles, NASDAQ was down like 80%. These guys still made money. They consistently make huge returns year after year after year, right? Anyways, really interesting book. You can learn about kind of the whole history of this. All the people who started the company ended up getting extremely rich, to the point, I remember there's one story in the book. One of the guys in the hedge fund, he made so much money, he started buying houses all over the US. And he bought one house apparently in like an illegal area. It was like a giant mansion. It was like 10-20 million dollars, like a huge house. And the government goes to him, says, you can't have a house here. This is illegal. It's like some, national land or whatever, right? And he's like, what are you talking about? Like, I didn't even know I had a house there, right? That's the kind of money these guys are making. It was absolutely incredible. The story is very interesting. Definitely recommend checking out that book if you want to learn more about this whole field. Right. So anyways, so that's Jim Simons, kind of like the little history of him. Let's talk about the stats of the company though, right? So this company, or this hedge fund, last time I checked, had $110 billion assets under management. I think that's actually a lot higher now. I think they're close to like maybe 150 or something like that now, because they've done very well year after year. The company, the hedge fund, has made an average annual return of 66%. There's over a 30-year period, longer than 30-year period, right? And this 66% return is uncorrelated with the stock market. Now, if you know a little bit about finance, you'll realize this is a really big deal, right? It's one thing to make big returns in the stock market. Like I said, you can just take on leverage, you can do that sort of thing. But it's a very different thing if you can make 66% return, and it doesn't matter if the market goes up or down, right? They don't care, right? Market goes down, they might make more money, right? It's consistent year after year, 66%, right? And by the way, and I've seen comments on Instagram about this, like, no way, there's no chance he's doing this. That Carl Icahn can't beat him. Yes, that is correct. That's absolutely correct. Jim Simons might be the best hedge fund investor in all of history, if you look into it, right? Maybe there's some people there's less documented evidence about them, but I'm pretty sure Jim Simons might be the best hedge fund investor ever, period, right? So why do I say that? Well, if you look at Warren Buffett, people generally say Warren Buffett does really well, right? He's only made 20 to 30% a year returns, right? Over this long time period, right? George Soros, people tend to think he's a pretty good investor, right? He broke the Bank of England, love him or hate him, he definitely made good money, right? He only made 20% a year, right? Carl Icahn, this guy has what was a stadium named after him in New York City. That's a lot of money, like to have something like that in New York City, like an entire stadium named after you, right? He only made 13%, right? All these other guys pale in comparison to Jim Simons, right? Don't believe me? Research him, check him out. There's literally books written about him. He's on the Forbes list, right? He is a rock star in this industry. Okay. And a rock star doesn't really want other people to know about what he's doing, because he'd prefer it that way, because then you take his returns, right? But anyway, so for those of you that look at 66%, you say, oh, that's maybe not that much. First of all, you probably haven't been investing for that long. If you think 66% is not good, that's an extremely good return, right? Maybe once you've done it for a while, you'll start to see how difficult that is to do consistently year after year, right? But let's put it this way, right? So if you put your money into the stock market, right? The stock market on average makes like 10% a year, right? On average, okay? People tend to say it's a pretty good investment, and they're right. It is a good investment. If you don't have your money in the stock market, you probably should, right? So if you took $10,000 and you invested it for 10 years, you'd end up with 25 grand, right? That's pretty good. 2.5 times your money in 10 years, literally doing nothing, right? Literally put it in there, walk away, and check it 10 years later, right? You made yourself $15,000, almost $16,000 in 10 years. Great, cool, that's awesome, right? This is why people tell you to invest in stocks, right? However, if you had invested in Renaissance and Jim Simons hedge fund instead, you would have made 66%. Okay? Now, for those of you that don't have a finance education, you might think, okay, well, 10,000, 10%, 10,000, 66%. Well, it's going to be something like 6 or 7 times more money, right? That's where you would be wrong, okay? Because of compound interest, right? Which means every year you get more and more and more, right? So 10% one year, 10% the next year, 10% the next year, versus 66% one year, 66% the next year. If you do the math, it grows a lot faster. It's like that whole thing. If you were to fold a piece of paper, what was it, like 20 times, you could get to the moon, right? It's just like exponential stuff. Obviously, you can't actually do that. But theoretically, if you could, you would get all the way that far because of the doubling effect, right? If you had a penny at the start of the month, would you rather have a penny at the start of the month and double every day for 30 days? Or would you rather have $1 million? You'd probably be much better off with a penny doubling, right? If you do the math behind it. So anyways, so stock market, $10,000 turns into 25K. Renaissance Technologies, Jim Simon's company, 66%, $10,000 turns into 1.5 million after 10 years, okay? That's 25,000 versus 1.5, almost 1.6 million dollars. That is a very significant difference, right? I don't know about you, but I'd much rather be in this camp, right? And you might say that sounds crazy. That's a lot of money. How the heck is that possible? Whatever. That's why he's so rich. That's why he's on the Forbes list. That's why he's one of the richest people on earth and growing. Okay. So, but he's not the only one, right? Like if you talk about Jim Simon, talk about Renaissance, they're definitely really impressive companies and have done quite well. But they're not the only ones, right? There's a lot of other hedge funds doing this too, right? For example, Two Sigma, right? Two Sigma is another company that uses a lot of technology to do this stuff. And last time I checked, they're running about $60 billion in assets, so another very large hedge fund, right? And these guys are also beating the stock market on a regular basis, providing very good returns to their clients, and not just in terms of, oh, we're beating the stock market percentage-wise, they're beating it on a risk-adjusted basis as well. So it's not just you're making 1,000% in a year or something crazy like that. They're consistently doing these things year in, year out, no matter what happens, they're beating the market, right? You take a look at Citadel is another one. Ken Griffin is the guy that runs this company. Again, another member of the Forbes list. I think it was said that his company has very few employees. He really doesn't have that many people working for the company, but they're very, very effective, right? The hedge fund, and he owns a bunch of different companies, right? The hedge fund runs about $32 billion last time I checked. Also, super high performer, making lots and lots of money. And actually, if you don't know this, but if you ever use the Robinhood app, right, to trade, you're actually trading with Citadel, right? You are not trading with other people. You are trading with Citadel and their robots that are automatically buying and selling stocks, right? So, and by the way, if you didn't know this fact either, it's something like 80 or 90% of all stock market trades are done by robots. It's not human beings that you're trading against. You're trading against robots, right? So if you are trading manually, you are actually at a disadvantage, right? Because you're trading against supercomputers, right? Something like a Citadel, right? Okay, so another really great company that uses data a lot. If you ever heard of Ray Dalio, right? He's been really big in the news. If you're into investing and sort of thing, he's put out some really good books, Principles, and a few other things. Really, really smart man. He runs literally the biggest hedge fund on earth. It's $138 billion. Last time I checked, I think it's probably actually up to almost 200 billion now, if I remember correctly. I haven't updated these numbers for like a year or two. Growing very quickly, biggest hedge fund on earth, right? If you listen to some videos about how he does his investment process, he talks a lot about data science. He talks a lot about the software that he does. They're hiring a lot of software engineers and paying them very, very well, by the way. I've heard you can make like $500,000 and up working as a software engineer at Bridgewater. Hard job to get, but very well paid, right? And this is how they make their money. You're not trading against humans. You're trading against robots when you're trading, right? And that's how they're making so much money, because they're able to go faster, have more information, and really do this on the cheap, right? You don't have to hire like 1,000 people to do this. You build one software program and it's able to outperform like crazy, right? So that's Bridgewater. If you want to read up on Ray Dalio, he's another really interesting person to learn about, right? So Syed asked a question, what about Ray Dalio as hedge fund investor? 210 billion. Yeah, that sounds about right. I think Bridgewater's probably around 210 billion by now. I need to update these numbers. It's been a while, because that's the thing. These guys are all making so much money. They keep growing so quickly. It's hard to keep up, right? But anyways, yeah, 210 billion sounds like the correct number for Bridgewater now, right? Gigantic company, manage a lot of money, right? You want to talk about who controls America, the president or whatever. This is the guy controlling America. Like $210 billion will give you a lot of power. Okay, cool. So we have Two Sigma, Citadel, Bridgewater, Renaissance. I mean, we can name a bunch of these. Like honestly, like name the best hedge funds, and they're all doing this stuff, right? But I'll name one more, and these are kind of just like the quintessential like tech forward companies, but really it's happening across the entire industry, right? D.E. Shaw is another one, and there's a famous person that used to work at D.E. Shaw. Let me know if you guys know who worked here, okay? Because he was extremely successful, and you guys definitely know who he is. But D.E. Shaw is another company that is basically a tech company that does investing, right? They've been around, I want to say, since the 90s, right? They've been around for quite some time. Last time I checked, they had 50 billion in assets. That's probably a lot bigger now. And basically they use, again, software to come up with investment decisions, right? It's not that they're sitting there reading a bunch of journals or whatever, right? They have software that goes out, gets a bunch of data for them, analyzes it, big charts and stuff, right? And they're using that to make their investment decisions, to automatically buy and sell. They can be in and out of the market 1,000 times faster than you, right? And they're able to make decisions with much more information than you would have access to, right? And that's not just because, they pay for these huge databases, which of course they do. And, we're not going to be, Bridgewater here, right? But even if you can't pay for all those crazy resources, you can still process information a lot better than you could by yourself, right? We're not talking about trying to be the next, Jim Simons, right? And maybe you could, right? It's possible. But we're just talking about doing better than what you're doing right now, right? Imagine the difference between you actually you sitting down and making investment decisions with a pen and paper or even Excel or whatever, right? Instead of doing that, you have a robot that's reading through 1,000 articles and looking at all the economic data across the world and making these decisions in split seconds and not being emotional about it. Like that's what we're talking about here, right? So anyways, so D.E. Shaw, another company that does this really, really good. And they actually helped foster, and I said there's a famous person who used to work here, someone named Jeff Bezos, right? So Jeff Bezos used to work for D.E. Shaw back in the 90s, right? He, I don't know if you guys have heard the story, but basically he was a Wall Street guy. His parents said, go to school, learn about finance. He went to go work in the finance industry, but he's interested in tech as well. So he went to go work at D.E. Shaw, which is a tech company that does finance, right? And when he was there, he learned a lot about coding. He learned a lot about how to analyze data. And he found that the internet was growing at this breakneck pace. It was something like 1,000% a year or something like that. And he's like, wow, if this thing's growing so quickly, maybe we should make a company on the internet and we'll make a lot of money. So he came up with the idea to sell books online, called it Amazon. And really the rest is history, right? He quit his job at D.E. Shaw. He's making a lot of money there. I think, I'm trying to remember what it was, but it was I think like 200-300K, and this is back in the 90s, which is like really good salary, right? Really making a lot of money back then. 100K is maybe not that much money these days, right? But back then, 100-200K was a killer salary. He was getting paid well, and he decided to quit. Said, I want to go start my own company called Amazon. His boss called him crazy, but supported him anyways. Went off, started Amazon, and became the world's richest man at some point in time, right? So, in other words, if you're looking at this industry as a whole, algo trading and investing using data-informed decisions, you are in very good company. There's so many of the people on the Forbes list have been doing this stuff and continue to do this to make a lot of money, right? It's definitely a breeding ground for very, very wealthy people. All right, okay, so that's the spiel about algo trading, right? Let's tell you guys a little bit about some of the stuff that we've been working on. bring it in more close to home, right? Before we do that though, let me answer a few questions up here. We have Brian. Brian asked, can we move on to actual content? I have a commitment to attend as well. I'll be hoping for more info on algo trading. Okay, cool. Yeah, we're going to get into the examples right now. Cool. So you're asking for this? Let's do it. Okay. So here I'm going to show you 4 different examples. Okay. So here is one of our strategies called the double EMA crypto strategy. Trend following double EMA crypto strategy. Okay. So here's one strategy. Basically, what it does is it invests in Bitcoin, Ethereum, and Litecoin. This is adjustable, right? You can actually change this in the code. It's pretty easy to change. And what they do, what the strategy does, is only invests in them when we have 2 signals. Okay. So we have 4 different EMAs, right? And both have to be above each other, right? So we'll have, so if you don't know what EMA is, it's an exponential moving average. It kind of like smooths out a graph, right? And you can have longer or shorter EMAs. Shorter EMAs move more closely with your stock. Longer EMAs, they tend to lag it a bit, right? So basically, we want to have the short above the long EMA for scenario 1. And we want to have the short above long EMA for scenario 2, right? I believe when we back tested this, this was the 26 EMA versus the 32, right? I believe, or is it 16 and 32? I forget the exact numbers here. And then the second one was the 16 above the 26, right? I could be off about exactly what those EMA numbers were. We could check it if you guys are interested. But basically, when those both are active, right, meaning that the shorter EMAs are above these longer EMAs, it means that we're in an uptrend, right? It basically means we went from either going straight to going up, or we went from going down to going up, or we went from going up to going up faster, right? Whatever it is, we're in an uptrend, okay? So we're looking at these 3 assets, Bitcoin, Ethereum, Litecoin, and if they're in that uptrend, we're going to own them. If they're not an uptrend, we're not going to own them, right? So let's say we had $100,000, okay? And we're investing in these assets, right? We're investing in this algo, right? Let's say Bitcoin is trending up, but Ethereum and Litecoin are not, right? We're going to put all of our money into Bitcoin, right? We're going to take $100,000, put it all into Bitcoin, okay? If both Bitcoin and Ethereum are trending up, then we're going to go 50-50 into each. If all 3 are trending up, then we're going to go 30% into each, or a third into each, right? If none of them are trending up, we're going to sit in cash and we're just going to wait, right? Because that means that we're in a downtrend, and that's not a really good spot to be, especially in the crypto markets. They tend to go really crazy. Like the last downtrend that happened for Bitcoin, I think it was down 75 or 80%, which is ridiculous, right? That's like a really, really big loss. You know, they say, there's this whole HODL thing in crypto. Sure, HODL, but I mean, I don't know about you, but I don't want to put my life savings into something that's going to drop 80% in a year. That's insane, right? This algorithm avoids that, right? And you can actually see it in the graph. So here is this algorithm in blue is our strategy, right? And then you see the benchmark, which is just Bitcoin by itself in the yellow, okay? So you see here that we have these big spikes, and this is because we have more than just Bitcoin. We have all 3 assets, so it's able to diversify a little bit and move up a bit more. But you also see that when things start to head down, so at some point we'll have heading down, but then it goes flat, right? And then flat and then flat. Or here we have this flat area as well. Notice whenever it's heading down, we're flat. So we made a lot of money on the way up. And on the way down, we didn't get hurt nearly. I mean, we still lost money, but not nearly as much as Bitcoin, right? Bitcoin is falling through the roof, or falling through the floor, I should say, whereas ours is protecting us whenever we're in a downturn. So here, instead of falling all the way down like this, we fell a little bit, we protected ourselves, and we're able to make that money back up later on, right? Here are the metrics on it, if you guys want to know the actual numbers behind this, right? Here's our strategy in this column, and our benchmark is in this column here, which is, again, it's Bitcoin. There's a benchmark, right? So we were able to accomplish over this time period from 2019 to July of 23. If we update this, would be even better, I think, at this point. But we this strategy was able to get 1,262% over that time period, around 3.5 years, 4 years, maybe 4.5 years, right? Which works out to being about 80% per year if you do the math, right? That's compared to Bitcoin, which also did very well, by the way. Bitcoin was a great asset to own. However, it only did 53% a year. So we beat even Bitcoin. We did even better than it, right? So we did an extra 30% a year, which can translate into, if you look at this, 1,200% versus 566%. So double the amount of money over this time period, right? Our Sharpe ratio is also better. If you guys know what a Sharpe ratio is, it's the risk to return ratio, right? Our Sharpe ratio is a 1 versus the Bitcoin Sharpe ratio, which is 0.81, which means that not only did it make more money, but it's also better on a risk adjusted basis, right? Because we don't want to just make a ton of money and risk it like a crazy person going to a casino. You could win once, but you're not going to win 10 times in a row. You know what I mean? This is the strategy that, you know, if you did over this time period, you could be winning that 10 times in a row. You're playing lottery and you're winning because you're not really playing lottery. You're using a much more thought out technique here, right? Okay, so these are all the different strategies here. You can see our volatility was a little lower than Bitcoin. Our max drawdown was lower than Bitcoin. So we're making more money and taking less risk. Very nice, right? If you guys want to see the details of it, and again, I'll do this again because a lot of people joined. I'll share again the link to this presentation, right? If you guys want to go through all of it. But here you can actually go in and check out each one of our tear sheet and our trades breakdown. If you want to know more about this, you have to go here. You have to download it to your computer. So the way that Google Docs works. So download, right? And then when you click on them from your downloads, you'll see it opens up and you can see the whole graph like this, or you could see the entire amount of trades that it did, right? And you could really break down how did the strategy work, what did it do, right? You could see the whole thing here. There's more metrics. You go all the way down. You could get, you know, how to do year to year. You see that beat it in almost every single year, right? 2023 is the only year so far that's lagging, and I bet you that turns around. We can look at it on a volatility adjusted basis. You can look at what months made the most returns. So for example, here, 2019 May, this strategy made 66% in 1 month. Wow, that's very nice. I don't know about you, but I wouldn't mind my money doubling in almost a month. So yeah, so you can go through all the details here, right, about how the strategy worked out, or you could also go through the trades as well, right? So you could hover over each one of these. You could see, okay, the red and the green, what is it doing? It sold here. How much did it sell? It bought here. How much did it buy? Right? You can see your cash value, which is in green, right? At one point in time, if you had used this strategy over this time period and you started with 100 grand, at one point in time in November 29th, 2021, you would have had $2.3 million in cash in your bank account. Literally, that's what the strategy would have done, right? There's a back test, a simulated result of the strategy, right? Okay. So if you guys want to look through that, there are those files for you to go over, right? Each one of these strategies, by the way, that I'm going to show you is going to have that same thing. So you can go in and really look at it. What are the trades doing? What happened with the tear sheet, et cetera, right? Okay, cool. So this is our crypto double EMA strategy, right? Let me show you another one. And there's a question here. So Syed says, that's an old school strategy. It's if it's going up, you put. I'm not sure what you mean by that, Syed, right? The strategy that we do here is the trend following strategy. Trend following is actually like quite sticky. It's one of the few types of strategies I've seen work across like pretty much every asset class. It's funny how prominent it is, and you know, it's a simple strategy but does quite well, right? Yeah, so I'm not sure, you know, hold on, whatever whether it's an old school strategy or not, I don't think it really matters. It makes money, right? And there's the proof behind it. When you actually do the back test, you can see how it does, right? A lot of people actually will say to do the opposite, right? When the stock market falls a lot, to buy. And there's some truth in that, but if you actually do the back test of it, you can see that you're better off to buy when things are going up, right? For the most part, right? That's just running a bunch of different back tests and trying different strategies, right? That you start to build an intuition, right? But okay, cool. So that's a trend following strategy. So here's another strategy, right? This one works quite differently, right? This is a mean reversion strategy, okay? What this does is basically will buy and sell, in this case, Bitcoin, right? But you could do this with other assets. So you could do this with Ethereum, you could do this with Litecoin, right? And it will buy and sell this asset depending on certain metrics. We're looking at Bollinger Bands and we're looking at RSI, okay? If you don't know what Bollinger Bands are, it's basically something that looks like this, Bollinger Bands. So if you look at a stock chart, it will basically put these bands around it, these upper and lower bands, right? It's like a kind of like a thing that follows it, right? And the way that these are calculated is using some pretty basic statistics. It's standard deviations around the stock price. And you're kind of saying, what's the chance of this thing moving to this spot, right? If we break above the upper band, we tend to say that this thing is moving too quickly upwards, right? And it's probably a good time to sell, right? If you break through the lower band, you're saying that it's probably moving down too quickly and it's probably a good time to buy, right? So it's a contrarian indicator, right? Where you'll sell when it goes up too fast and you'll buy when it goes down too fast, right? This is a short-term thing, by the way. If you look over the long term, it does different. This works really well in the short-term type strategies. If you go into a long-term type strategy, you're going to see the opposite happening and find it trend following to be more prevalent, right? But what this strategy does is it looks at the upper and lower Bollinger Bands, seeing if you fall through those. And then on top of that, we'll also look at RSI, which is a called is the relative strength index. Okay? And basically will give you a number between 0 and 100, saying how things are moving as well. So it's kind of a similar type of thing. If it moves up too quick, the number is very high. If the number's low, then it means they probably move down very quickly as well, right? Sometimes people say that this is overbought, oversold. It could be an indicator to buy or sell depending on different situations. But it's kind of telling you the same thing that a Bollinger Band is telling you, but in a different way of calculating it. So you have two ways of confirming that, right? You don't just have Bollinger Bands or RSI, you have both and they confirm each other, okay? So here, and again, this is a short-term, right? Short-term trading. This trades throughout the day. Sometimes we'll place, 10, 20 trades a day, right? So this one, when you back test it, right? And if you could find a broker that has a very low trading fee, you could actually accomplish this, right? But this is back tested from 2021 January to 2022 May, right? I feel like I need to update this. It's been a while since I've ran this. It takes a while to run, which is probably why I haven't done it for a while. But you can see very easily here how well it outperforms, right? Not only, so again, blue is our strategy, right? This is algorithm here. And then yellow is the benchmark, which is Bitcoin, right? You'll notice that not only did it beat Bitcoin, right? But it did it in a much more stable fashion, right? It's not following the ups and downs of Bitcoin. It's much more stable. It's trading in and out quite quickly. And that's able to make it not really get affected by the price of crypto, right? It doesn't really matter if it's up or down. It can make money either way, right? So when you back test this over this time period, this is about a year and a half or so. It made 122% over the time period versus Bitcoin, which did 35, which works out to about 85% a year versus 26% a year for Bitcoin over that time period. So more than three times the return of Bitcoin over this time period, right? The Sharpe ratio is also much higher because not only are the returns higher, but you're also taking less risk, which you can see here, your max drawdown would have been 30% versus 50, right? Bitcoin max drawdown would have been from the very top to the very bottom, you would have lost half your money, moves a lot, right? Whereas this strategy would have only lost you 30% over that time period in the worst case scenario, which I think is from here to here, that's what it looks like. And then also your volatility day to day is quite a bit lower as well, right? So less risk, more than triple the money. I think that's a fantastic situation to be in, right? Again, if you guys want to learn about the details behind these strategies, you can go in here, download the tear sheets, download the trades. You can see all the details, right? Okay, and I have a couple questions here that let me answer. So Brian asks, Robert, can your algos trade options? They absolutely can. We have an entire class just on options trading, very specifically focusing on that. We're going to be doing a presentation like this, I think, over the weekend, talking specifically about just options trading. So you can look forward to that. You can see that on Sunday. And we have an entire class that goes into all of that, right? So the question is here. So simple put option strategy, buying in the money when a stock is below an EMA and sell when hit profit target or when touches EMA. We can absolutely do that. I haven't built that strategy in particular, but I think we could probably build that. You know, we sit down, if you're in one of our classes we'll talk about later on where we actually build these things, we could probably build that in like a good 2 hours, I think, or less, right? So Brian, absolutely that's possible. We could build it, we could back test it, we could tweak details about it. So not only can we build you that strategy, but we can fine tune it, right? Which stock works the best, right? Are there specific times of day you want to be doing this? Are there specific expiry dates you want to be looking at? How far into the future? Or are there specific, delta, gamma, whatever that you're looking at for these options, right? So not only can we build that strategy, but we could refine it to be, a lot better off than something that you'd be able to do manually, right? And we could back test it, we can see how it did, all that sort of thing. All right, so thanks for that question, Brian. Absolutely, we can do that. Like I said, we're going to do it over the weekend. I'm going to demo some of that stuff. These are crypto and stock strategies, but I'm going to demo some option strategies over the weekend on Sunday, I believe. Dayton asked, do you have a trading bot doing it connected to the trading platform? Yes, we have a bunch of bots running. I have a few bots working right now. I could tell you one bot that I'm running that is doing this. I think diversified leverage is the next one I'm going to talk about. I've been running this for some time. I think over the past few months, it's more than doubled my money. So it's done quite well. So yeah, we have a bunch of these. I also have this one, trend following WMA, working for me as well. I've been checked up on it for a while, but that one was doing quite well over time. So yeah, so we absolutely hook this up to brokers and we can trade that as well. And then Brian, so another question. So are most of the strategies you have long-term? I like that to build wealth over time. I'm interested in intraday trades where I'm out of the market each day, especially in the current market. Yeah, we have a mixture of both, Brian. It depends what you're trying to do, right? So there's all sorts of strategies doing all sorts of different things, right? Most people, when they think of algo trading, they think day trading and let's, get some indicator or look at support resistances or something like that and trade that, right? And we absolutely do a lot of that, right? We have tons of strategies that do day trading, support resistance, or look at different indicators or whatever. We have lots of different strategies like that. But the advantage of being able to do something with Python, which is what we go through, is you can do a lot more advanced stuff than that, right? We have strategies that use machine learning and artificial intelligence to trade, things like ChatGPT, trading the news, things like machine learning, like an AI, actually looking at past historical data and trading off of that, right? We have stuff that follows insider trading. I think I'm going to show you one. Yeah, a Congress trading bot. We have lots and lots of stuff they can do. So absolutely, when we're talking about these strategies, you can definitely do these intraday strategies that are trading a lot if you want to. You could also do the longer term strategies as well. It just depends on what you want to do. It's an automation tool, right? So we're not here to take bets on specific strategies in general. We're here to act as scientists, build this out, see what the results would have been, back test it, and then take that information and trade with it, right? So we want to be very systematic in the way that we check which strategies we invest in. We'll take any kind of strategy. I've yet to see a strategy that someone's told me that we cannot automate. Pretty much everything is automatable at this point, especially with all the new AI tools that are out there. So pretty much whatever strategy you could think of, we can put into code, build it, back test it, see how it would have done over the past 5 years, 10 years, say, is this a trash strategy or is this good? And how do we tweak it and make it better, right? And then once we are satisfied with that result, how it did historically, then we run it live and, suggest we start with fake money for a little bit, right? Just to see how it does. but then you can put into real money. It's very easy to do that transition, right? The way we've built our technology is really easy to do the research part, and then very easy to switch it over to running it live. Right? So Brian, you're asking about the Sunday Zoom session. We will be sending out a bunch of emails around that soon, right? So you might even get an email tonight about it, or sometime tomorrow. But yeah, we will we'll be sending out those emails quite soon. Right? Cool, awesome. Okay, so we talked about two strategies. We talked about trend following. You talked about mean reversion. These are both crypto strategies. However, you could take the same code. It's very easy to go, well, if you're doing this on Bitcoin, you could do this on Ethereum, you could do this on Litecoin, you can do this on futures trading, you could do this on Forex, you could do this on stocks or things like the TQQQ, leverage indexes. You can take the same strategy. It's very easy to move from different asset classes and apply it to different things, right? Cool. All right, so let me show you another one. So here's another strategy. It's called diversified leverage. I personally have some money in this, and I actually want to put more money into this because it has been performing very well. So what this strategy does is, we talked about Ray Dalio earlier, and he's one of the most successful hedge fund investors of all time, right? Manages, $200+ billion in assets. Now, he came up with this idea of the all-weather portfolio, right? So I have a question here. So Dayton says, what is the most stable crypto trading platform in Canada with low trading fees? I'm not entirely sure in Canada. Most of the brokers I use are US based. Low trading fees in Canada, I'm not sure. I'd have to look into that. Crypto.com has quite low fees if you get their credit card, right? You get very, very low fees with them. You get their credit card and you invest in some of their coins, they give you a really, really low trading fee, right? But there's a bunch of other brokers out there. It's something that you'd have to research. Sorry, I don't know offhand what the answer to that is. Okay, cool. All right, so diversified leverage, right? So this strategy is basically mimicking Ray Dalio's all-weather strategy, right? So he has this idea, and again, he's one of the world's richest hedge fund, one of the biggest, he runs the biggest hedge fund in the world, right? And what he does in his all-weather strategy is he basically invests in stocks, bonds, and commodities in his portfolio in a specific ratio, right? And he does this because he wants to protect himself from every possible bad situation that could happen, right? So he breaks it down to a quadrant and says, well, what can happen in an economy, right? Well, you could either have high growth or low growth, or you could have high inflation or low inflation. Those are kind of the main things that are moving the stock market or moving markets in general in an economy, right? If you have high growth and low inflation, everyone's having a party, right? Stocks are shooting up like crazy. Bonds are doing very well. Commodities are not doing well though, right? Because everything's just getting cheaper or whatever. And that's kind of what we've seen over the past decade, right? High growth, low inflation, right? But then there's also scenarios like right now, which is low growth, high inflation, right? Stocks don't tend to do very well. Bonds do horribly during that time. I don't know if you guys owned any bonds, but you would have gotten hit really hard with that. But commodities do very well during that time period. So things like gold, things like silver, things like oil, those tend to do very, very, very well in those time periods, right? So you want to basically balance your portfolio to protect yourself against all of these moves to reduce your risk as much as possible. Now, if you follow that strategy, you can back test it. You'll see that he's right. You do really reduce your risk a lot, right? So you have a very stable way of making 7% a year. Super stable. Like if you have your grandma that's investing in some of her stuff, that's probably a good strategy for her, right? It's very stable, doesn't have to worry about things, and she's still making pretty good money, right? 7% is still quite nice, right? However, we want to do better than that, right? So we kept experimenting. We're scientists, we're experimenting with all these different things. We basically take his strategy, and instead of doing exactly what he's doing, we put some leverage into it, right? So there's ETFs they could buy on the market, like on the NASDAQ and all that, like TQQQ is a triple leverage NASDAQ. is 3 times the returns of the NASDAQ, right? So if the NASDAQ is up 1%, you're up 3%. If it's down 1%, you're down 3%, right? So you take it both ways. If you look at this over a long period of time, though, it does very, very well, but it has these crazy dips, right? Like in some years, I think last year it dipped like 50% or 60%. It's a huge drop, right? But if we take that, right, we take the TQQQ, we also take a leveraged treasury, which I think is like TMG or something like that. And then we take leveraged commodities, which we do for gold, which we do for oil, and you invest in all those together. Then you end up reducing the risk of your portfolio, but you still get that return like it's leveraged, right? So it's a way of almost gaming the system, if you will, right? They say there's no free lunch in finance, but diversification is one of them, right? So here the strategy in the blue is the diversified leverage strategy, and the yellow is the S&P 500. We're comparing against that. And we see that the blue strategy or the blue graph, our strategy does quite well. And actually, if you take this further, this went up a lot recently. Like you'll see, it's like maybe even up here is almost fully recovered this drop. It goes up even further, right? We're actually looking at this at a very bad time period. This does even better if we do longer time period, right? But you see here that it's basically above the S&P the whole way through. It's not even close, right? Like from the very beginning, you're making more money the whole way through. It's a very stable way of just like beating the heck out of the market, right? Over this time period, and this is a longer one, we went from 2010 up until around now, maybe like a month ago. This strategy would have made 1,300% over that time period. And that's versus the S&P, which did only 400% only, right? Over this 13-year period, which roughly works out to about 22% a year, versus the S&P, which was doing about 13% a year over that time period. So the S&P did really well. We did almost double that, right? And 22%. And again, when we talk about this compounding, double that per year ends up being a heck of a lot more money in the long run, right? So not only are we being in the market, but we also have a higher Sharpe ratio, right? Which means we're not just taking on more risk, right? We're actually doing something more intelligent. We're using risk in a very smart way, right? So we have a higher Sharpe ratio than S&P. And again, if you look at this today, it's even higher than this, right? So we happen to just catch it like the worst possible time for this algorithm, but it's actually much, much higher now. It's shot up a lot. And then you see the max drawdown. The max drawdown is higher, right, than the S&P 500, and our volatility is higher, right? But we are getting compensated well for that risk, right? We're fine. We're taking more risk, but we're getting a heck of a lot higher return as well, right? So that's our diversified leverage strategy. I personally have a bunch of money in this as well. And like I said, it's been doing quite well lately. I think it's almost doubled my money in like the past few months. Brian asked a question here. So that's an interesting strategy. If I'm not trading options, I'm trading the Qs. I was trading SQQQ today. Yeah, definitely. That makes sense. SQQ. By the way, small thing, if you're trading SQQQ, that's the triple short NASDAQ. If you actually compare that to just shorting it versus running SQQQ, you actually make more money shorting it because SQQQ isn't run very efficiently, right? And you actually lose out on some money. If you actually look at the comparison between SQQQ and just shorting it with a triple leverage thing, you end up making more money shorting it, right? So if you're trading that kind of stuff, you might want to look into that. And again, this is why we back test and we use data, right? Because we can see those types of things, right? So there's more efficient ways. TQQQ is great. SQQQ has some issues, right? Cool. Okay, so I showed you 3 different strategies. Let me show you one more, and then we'll kind of talk about the longer term stuff for this, right? So here's a strategy that we call Congress trading, okay? And it's called Congress trading because that's what it does. So basically what this strategy does is it watches what members of Congress buy and sell, right? I think someone made a comment on our Instagram today. Oh, Jim Simmons, he's not beating Pat Pelosi, right? Which is funny because he's beating him very badly, right? But second of all, why do you talk about Pat Pelosi and Nancy Pelosi? Why is that a whole thing? Well, because they're able to have some really, really good stock picks, right? If you follow Nancy Pelosi or other members of Congress, they are really good at trading stocks, right? if you follow them, they legally have to disclose what they bought or sold, right? Because that's the laws in the US, is Congress members have to do that. They have to say they're considered insiders, which makes sense. You're the ones that make the laws, right? You are almost by definition insiders, right? But they do really, really well, right? Members of Congress seem to have this really good hit rate, right? If you were to go through it, you'd see that, you know, people like Nancy Pelosi, they really outperform like crazy, right? Why is that? Well, if you think about it, right, not only are the ones setting the laws, right? So let's say if I'm about to put out a law, an antitrust law against Google or something, well, I'm not going to buy Google. That's stupid, right? Like I know it's going to pass. Like, why would I do that, right? Or if I know that I'm going to pass some laws that's going to benefit Facebook, right? Well, then I might want to buy Facebook because I know they're going to do better, right? So not only do you have better information, you really are like an insider trading, right? But on top of that, you can actually even influence the company, right? You can know what they're up to. You're a member of Congress, you hear things other people don't hear, and you can actually make things happen, right? So anyways, all this is to say, you know, if you want to make some good money, just listen to your members of Congress and see what they're doing, right? So basically, that's what the strategy does, okay? It looks at all the members of Congress in the House, right? This doesn't include Senate, but we could add that in as well, right? So all the members of the House, and there's what, a couple hundred of them, right? Takes all those people and says, okay, over the past month, what did they do? What did they buy? What did they sell, right? And if if more than 4 people bought a stock, then we're going to go and buy it, okay? If they didn't, then we're not going to buy it. We have another one where we even short it, right? We've experimented a lot with this one. There's a lot of like experimentation we've put in. We've tried, what if it's 28 days? What if it's 14 days? What if it's 60 days? We've tried, what if 3 people bought it, 2 people bought it? We've experimented with all that, and I can even show you all the different back tests and how all of them worked out, right? And this ended up being the best situation, right? 4 members of Congress bought it over the past 28 days. Okay? If you had followed this strategy, and we have about 2 years of data that we were able to go back over. If you had followed the strategy over the past 2 years, you would have made about 38%, versus the stock market, which did 6% over that year. So by the way, you got to look at all these returns relative, right? Some people will say, oh, I made 50%, or I made 100%, or I made 20%, whatever. It depends when you did this, right? If you had made 30% in the past, 6 months, not that impressive. The whole market's up that much, right? If you had made 30% last year when the whole market was down, you're a freaking genius, right? So that's basically what happened here, right? The whole market was pretty much down most of the time, right? It didn't do very well over this past 2 years. Only did 6%, which I'm actually even surprised is positive, right? In the meantime, this strategy made 38%, right? Very significant increase over that, right? So 3% versus 17% on an annualized basis, right? A Sharpe ratio triple that of the stock market, which is amazing, right? A volatility only slightly higher than the stock market, a max drawdown that's less than the stock market. So overall, very, very good strategy. This thing just kicks ass, right? And actually, I forget who was asking about the options, right? I think Brian, were you asking about it? Yeah, Brian, you're asking about these strategies for options. We actually took this strategy and used it with options as well, right? And actually had even better results, right? So I feel like I should show that next time. But with options, it'd be even better, right? Because now we're leveraging this whole thing, right? So anyways, really cool strategy, did very well over this time period. Again, if you want to look at the tear sheet, if you want to look at the trade breakdown, it's available inside of here, and you can look through all the details of how it worked. And by the way, notice here, when you look at the strategy, right, you'll notice that there's like time periods where it was flat for long periods of time. It's when the Congress members were not buying things, right? They're actually almost even like a good indicator for where the market's going, right? If they're buying lots of stuff, you can kind of see maybe it's a good time to invest in the stock market in general. If they're not buying stuff or selling things, and maybe the stock market's not going to do so well, they're actually like really good barometers for that kind of stuff, right? So, okay, cool. So that's our Congress trading strategy there, right? Like I said, we have a lot of these strategies. I just showed you 4 of them. We're building them literally every week. We have a class called our live algo hour, where literally every week we build a new strategy. We have, like 10, 20 people, not 20 yet, but like a little over 10 people in there, really smart guys. We all kind of come together and come up with different ideas. We have stuff where we like trade ICT using Forex. We have stuff where now we're using a lot of machine learning and AI to trade things. Like we're building all these new algorithms constantly. So actually some of our newer stuff is even much more interesting than this, I got to say. I haven't updated this presentation for a bit, but we're building lots and lots of stuff, right? So also say I showed you 4 here. There's another 50 behind the scenes that you can see, right? And like I said, I think it's a very smart thing when you're investing. Don't put all your eggs in one basket. There's literally multiple strategies that you can put your money into and diversify that way, right? Okay, so there's a couple questions here. So Brian says, that's interesting. I've traded QQQ puts, but not shorted QQQ. Instead, just use SQQQ. I'll check that out. Yeah, definitely check that out. It's kind of an easy way to make more money, right? Because SQQQ just doesn't perform as well as you think it is. Like if you actually measure it, it doesn't do as well in most situations. There's a whole, if you want, there's an article I found about this that went through all the details. Okay, and then Dayton, is it working collecting Google data, or how they collecting trading activity from Congress members? So Congress member activity is actually public, right? If you go Congress trading, right, there's like websites that even like make this easier, like capitaltrades.com. You could go in here, you could see all this stuff. This is, I mean, you could literally go to the SEC and just see this stuff. But here they just make it a little easier to read, right? So you could see, okay, what did each member of Congress buy, whatever, right? And our algorithms plug into this sort of thing. We actually plug into specifically Quiver Quant, is providing the data for this, right? So Senate trading dashboard, right? You can see, how they're doing this stuff, right? And this is, Senator trading performance, right? And this echoes what we have here, right? They back tested this and they kind of went through the whole thing, right? And you could actually even say, okay, each member of Congress, how is each one doing? So we could say, where's Nancy Pelosi? I don't see her in here. Pat Roberts. Yeah, I guess this is Senate. It's not the House. I think Pelosi's on the House, not the Senate. By the way, this is where we're getting our data from, and where we can do that for this specific strategy, right? But yeah, all of our strategies are pulling data from all over the place, right? Depending on what you want to do. Right? Cool, awesome, great question. Cool. All right. Okay. So that's some examples of our strategies. So let's say you want to get into this and you want to learn how to build your own algorithms like this, right? Or you want to copy ours, right? If you want to do that, then what you want to do is you want to take our algo trading course. It is going to give you all the code that I talked about today. And it is going to teach you how to build this kind of stuff from scratch, how to modify it, how to build all these things and really come up with your own strategies like this, right? So here's this class. Let me share a link with you. And as I mentioned earlier today, we actually have a new product out that I think you guys will love because it's a really, really good deal. We're trying to become more of a like a SaaS type business. So we'll talk about that in a second. Right, but there's a quick question here before we continue. Dayton asks, can we mirror big corporate trades the same way? Yes, absolutely you can. Yeah. So you could find insider trades on the SEC website as well. And there's a bunch of data providers that you can pull that from. So if you want to copy insider trades inside of corporations or corporate buybacks or anything like that, you can absolutely do that too. Right. And buybacks tend to move stocks quite a bit. Right. What was it? There's an interesting thing I saw on Twitter today. It was, what's the biggest buyer of Apple stock? Who bought the most Apple stock? Is it Vanguard? Is it BlackRock? Is it, Warren Buffett? Like who bought the most Apple stock over the past year? And it's none of those. It's Apple itself. Apple itself bought more shares than anyone else, right? So you want to talk about why is the stock going up? Well, because they're buying their own stock. They're moving it up, right? So yeah, you can absolutely track that and build algorithms around that too. I think that'd be a very interesting thing to try, to actually look at all these corporate purchases and just buy the stocks or doing lots of buybacks, right? I think it's a great idea. Thank you for asking, Dayton. Cool. Okay, so let's talk about our full algo trading course, right? So if you're serious about this, you want to get into this stuff, you want to build your own algos, or if you just want to take our algorithms that we have here, use them, modify them, Well, the way to do that is through our algo trading course, right? This is our top course, flagship. We have a bunch of different courses. If you go into our website courses, we have our options class, we have a crypto class, we have a class on AI for trading. We have a bunch of classes out there, blockchain, Web3, right? Our flagship class though is our algo trading. This is our bread and butter, and this is what we're very, very good at, right? All the other classes kind of revolve around this, right? So this will teach you how to build these types of algorithms and how to use the ones that we have, how to deploy them, run them, modify them, back test them, all that kind of stuff, right? So here is course learning outcomes. Here's the course curriculum, right? If you want to know exactly what this course does, it's a 3-part course, 12 weeks long. Okay? Part 1, we go through all the fundamentals. We'll teach you how to get your computer set up and all that. You'll get to know other people in the class. This is a live class that we run as well, so you get to know other people in the class. It's really cool. A lot of people end up working together after this. We do all that in day 1. It's very collaborative, right? Week 2, we go through a Python refresher. So for those of you that know Python, it's going to be very quick. For those of you that don't know Python, we're going to teach you how to do the basics of Python in a day, right? You don't need to be a Python expert. A lot of people think, oh my God, I have to learn all this stuff. It's like crazy difficult. These days, AI makes it much, much easier. And when you're building algorithms, you really don't need to be that good of a Python programmer, right? There's a guy that we work with, Sofian, maybe you guys came through us from him, right? This guy, Sofian, he literally works in the industry creating algorithms using Python. And when I speak to him, he's like, I'm a terrible Python developer. I can't do this stuff for the life of me, right? But you don't need to be good, right? You just need to know how to do the basics, right? You need to know how to do an if statement here, how to do this there, right? And basically figure that stuff out. And then using AI on top of that makes it so much easier. So I hear from someone here, there's zero Python knowledge. That's no problem. That's what we're going to teach you here in the class. We're going to walk you through that, right? So if you are a Python developer, if you've written Python code before, don't worry, this is not going to be so simple because we're really more focused on the trading side of things. Because again, you don't really need to be a good Python developer for this stuff. And if you have never written a line of Python in your life, we will be teaching you that. So this is another benefit to this class. You're actually going to learn a new skill, right? Which could be very useful, by the way, in your jobs and things like that. This Python, I think, is one of the highest paid professions in the world right now, like a data scientist. Like you want to talk about AI and data scientists and all these people that are getting these really well-paid jobs, 150, 200, 300K, they're the ones working with Python and that sort of thing. So you're going to also learn that skill from this class too, right? Okay, so week 1, introduction. Week 2, we teach you about Python. Week 3, we'll show you how to set up a back test. So all that stuff that we went through today, you'll see how to do that, right? How to place trades, how to use a back testing library, all that kind of thing. Week 4, we're going to talk about using pandas for algo trading. Maybe this could be better named how to do data science, right? The basics of data science. We'll show you how to download data using code. We'll show you how to manipulate it, graph it out, do comparisons, get stuff from different websites, stitch it all together, and all that kind of stuff. You'll have a very quick training in data science in a day, and specifically geared towards finance with code they can reuse and do in different things, right? Okay, so that's part 1. 4 weeks, you're going to get to know all the basics of the stuff, and you're going to get all caught up, right? Okay. Part 2, and before I get to part 2, there's a few questions here. So Mark says, how about never writing anything? Yeah, Mark, if you never want to write anything, if you never want to write any code, then you could go and find some other way to invest, right? What we're about here is we're about trying to better your investment ability and trying to improve on that. And that's not going to come very easily. You're going to have to put in some effort into that, right? Using software and using Python code is what's going to get you there. If you're talking about how does Jim Simmons do this, how does Ray Dalio do this, how do all the best hedge funds do this kind of stuff, they're all sitting there writing software code and building this stuff out. And again, when you use AI, it makes it a heck of a lot easier to do that. Okay, and Brian asks, do you need a high-powered laptop or computer to run any of this, or is it all in the cloud? So we do kind of half and half, right? So half of it is on your laptop and half of it is in the cloud. You can kind of pick. You can follow along in the cloud the whole way through if you want to. Actually, you don't have to do any of it on your laptop, really. There's some advantages to doing it on your laptop, but you don't have to, right? So you can do it all in the cloud if you'd like to, right? And we talk about actually part 5 is how to run in the cloud, and this teaches you how to do all that stuff, and we can continue on from there, right? But generally speaking, you don't really need a superpower laptop to do this stuff. If you're doing like crazy machine learning AI stuff, then yes, right? But again, I'd recommend to do that in the cloud anyways, right? Because who here can afford a $10,000 computer and use that? I mean, some of you guys maybe, but it's easier to just pay someone like $50 a month to do it in the cloud, right? It's a heck of a lot cheaper and easier to do. So yeah, so you can kind of do it both ways, but you really don't need to have a superpowered computer to do any of this stuff. I've seen people do this on pretty old school computers, and it's working out quite well for them, right? We do a lot of this stuff in the cloud. Okay, so part 2, as I mentioned, week 5, we talk about how to run your bot live in the cloud, right? So we're going to talk about linking this to your broker, right? We're going to talk about how to run this thing live in the cloud. We're going to talk about Replit, which is the cloud provider that we're going to be using. And, we can go into why that's such a good thing, because it makes it really easy to run your code and that kind of stuff, right? So we use Replit, and then we'll kind of go through all that, right? And then in week 6, we'll talk about market mechanics and strategy components. We'll talk about what are the different order types out there? How do these markets work? How can you actually get a lot of this stuff using this data? And then we're going to actually build a strategy live in class. So you're going to see building out a strategy, what it looks like from A to Z, right? Okay, cool. There's another question here. So Mark says, I didn't mean I didn't want to. I mean, if I've not written in any time recently with little recall to code. Yeah, so Mark, so like I said, it's the AI tools have made this a lot easier lately. So if you've written code in the past, right, if we have a little bit of coding experience, they'll help you a lot actually, because you kind of like understand the mechanics of it. But honestly, you don't need to be like that good of a coder anymore, right? Like go to ChatGPT and literally you can type into ChatGPT, like download this data and analyze it, and it will do it for you and create all that code for you, right? It's gotten like really good at this stuff. We also show you throughout the class how to use AI tools like GitHub, what is it called again? GitHub Copilot is what it's called, GitHub Copilot. And basically when you're writing code, it's like filling in the blanks for you. Like I swear to you, for me, I've been coding for a very long time. I don't really code that much anymore. Honestly, I just kind of tell the AI what to do and just does it for me, and then I correct it if it's wrong, right? So it really makes your life a lot easier. If you haven't coded for a while, you'll be very impressed what these AI tools can do, and they're just getting better and better and better, which means that you learn the skill, you're going to be able to move 10 times faster. Literally, I think without exaggeration, I could do the job of 3 people right now just by using these AI tools, maybe more than 3 people, right? Like compare myself to not using AI versus using AI, like it's night and day. I can run circles around myself, right? It's like, it's not even close, right? So AI tools really, really help a lot with this, right? Cool. Okay. All right. So we talked about week 5, 6. Week 7, we're going to talk about how to work with stock and economic data. So we're going to pull all sorts of different data sources from Yahoo Finance, from NASDAQ. We're going to pull all that stuff in. We're going to learn how to integrate that stuff together, how to build that into an algorithm, right? And then we're going to build a bot together live. So if you have a strategy idea, right? Like for example, Brian, I think you had an idea for a strategy for options. This is the time to actually do it, right? If you're in our live class in day 7, you can say, hey, can we build a strategy? And I'll say, okay, let's do it. And we'll literally build it during the class, right? And not only are you going to see how to build this thing, right? So you'll be able to learn and watch, okay, this is practically how to do it. But then also you have the code afterwards that you can use and modify, right? So day 7 is going to be a lot of that kind of stuff, right? We have a few days, and we've learned over time, I've been teaching this class for a while. People really love those days, right? So we have a bunch of those days where, I ask you, what do you want to build? And I'll build that algorithm during the class for you, right? And especially if it's something like what you mentioned with stock options, selling or buying puts, that kind of stuff is really easy to do. And we could probably knock that out within an hour or 2. Right? So we're going to do that in day 7, right? And then day 8, we're going to talk about financial performance metrics. We're going to talk about, all the stuff we did today. What is max drawdown? what is a Sharpe ratio, all that kind of stuff. So you can understand how to see what your backtests are doing, what your bots are doing. And then again, we're going to build another bot live. So you get to see what, you get to build whatever it is that you're looking to build, or we could try something new. We can modify things. We kind of open up the floor to allow to create whatever needs to be created, right? If you have a burning desire to build a strategy, that's the time to chime in, and we can actually build that in class, right? Okay, week 9, we do a case study around a debt trading algorithm, right? Basically using economic data on the debt in the United States to determine whether we should be buying or selling the stock market. It's actually pretty amazing how closely correlated it is. And you can actually use a lot of macroeconomic data to trade the stock market. It's a very fascinating kind of thing. We'll go through that whole case study. You'll see how all these different metrics apply and how you could actually turn that into an algorithm and trade with it, right? So that's week 9. Week 10 and week 11, we're going to go through all the examples that we have, right? So these 4 algorithms I showed you today, plus all the other ones that we have, we're actually going to organize them into a website so you guys can watch them day to day soon. You'll be actually watch what happens minute by minute, actually not even day by day, minute by minute, what each strategy is doing and all the back tests and all that. And we can walk through any of them in day 10, day 11. How do they work? How do you go from the beginning to the end? How you modify it? All that kind of stuff you'll learn in day 10, day 11. And again, it's more open-ended in the live class to be able to try that out, right? Okay, and then week 12, we're going to talk about machine learning or AI, in other words. We're going to talk about how to build algorithms using AI or machine learning. And we have like an entire class that even goes into that fully, right? Okay, cool. So that's it. So by the end of 12 weeks, you will have learned how to build a back test. You'll learn how to put an algorithm up on the cloud. You will have access to all of our trading strategies that we've made in the class, which is, I think, over 50 at this point, right? You'll be able to play around with all of them, see which ones you like better, tweak them, all that kind of stuff. You'll learn how to do that. You'll have a chance at building a few algorithms live in the class. So if you have some ideas, we can build that live for you, right? And you'll learn about AI in trading. So by the end of it, you're going to be quite polished in this, right? Okay. So let's say you want to take this class. How do you want to take this class? Okay. So we have 3 different options, right? We have our self-directed, we have our live, and we have our project help and tutoring plan. We also have a 4th one now on top of here, which I'll talk about afterwards, which is basically a subscription plan that makes it even easier to do all this stuff. And you get a lot of really cool stuff with it, right? But before we get to that, right, and that one's like a super fantastic value, and I think you guys will really like it. Let's talk about the 3 plans that we have here for this class alone, okay? So each one of these builds on top of each other, right? So the live class is everything that self-directed has plus more. The project help is everything live has plus more, right? So they build on each other, okay? So self-directed plan is basically, you're going to get access to all of our videos. You're going to get access to all of our code, all the classes we've ever recorded on this topic, algo trading, right? And you're going to get access to our community so you can speak with other people over Discord and that sort of thing, right? So that you'll be able to learn on your own pace whenever you want, watch the videos, write the code, use our code and go through all that, right? Okay, so that's a self-directed plan. Our live client takes all that and builds on it, right? So again, you get all the code, all the strategies that we've built, right? You get all the videos, all the recordings that we've made around this class. You can watch them, rewatch them however many times you want. And over long time periods, we've done a lot of different things in there, right? And you're going to get access to our community. But on top of that, with live classes, you're also going to get a lot of support, right? The self-directed plan comes to support. We'll get on the phone with you. But live classes will spend a lot of time speaking with you if you need help with it, right? I think it's like 7 hours or 8 hours, which is quite a few if you need help with things. But on top of that, and the main thing about the live classes is that the classes are live, right? It's like this, we're on Zoom right now. You guys are chatting back and forth. This is what the class will be like. So if you have any questions going through anything, you can answer on the spot. You could actually even share your screens if you wanted to. Hey, I'm stuck somewhere. It's not working for me. Share your screen. We can fix it for you on the spot, right? If you, let's say, you have some question, you could turn on your mic, you could ask the question, you could even have a discussion right? It's very interactive, and you really get a lot from it doing that sort of thing, right? Dayton says has to go. All right, have a good night, Dayton. All right. So yeah, so live classes, that's what you get. You get all the benefits of the self-directed, all the code, all the recordings. On top of that, you get to be part of this live class, which is really helpful. Not only to answer your questions and all that, but it's also really good for pacing. A lot of people find you show up every week, you really can get into it, right? That's for live classes. Then we have a project help and tutoring plan, which is all of that plus more. Basically, we have an entire team of software engineers, and if you want, we can build stuff for you, right? So you will have a lot of our time, not just for help with the class or for tutoring sessions. If you need that, we'll spend a lot of time with you doing all these things. But on top of that, you're also going to get access to our software team, which can build things for you, right? So you're going to get a lot of help from that, right? So if you're serious about the stuff, you want to build some cool things, project help and tutoring is the way to go, right? Okay, cool. So those are 3 different plans. So naturally, next question is how much do they cost? Here's a cost of our 3 plans. And again, I have a 4th one that I'm going to show you after this. I think you guys will really like. So our self-directed plan, which is the video library, the code, access to community, and basically lifetime access to all this stuff. This class is $3,000. You have 3 and 5 month payment plans to pay for it, so you don't have to pay it all up front. Don't feel like you have to do that. We have payment plans, right? We have a live class, which again, I spoke about, has everything from the self-directed, the videos, the code, all of our strategies, all that kind of stuff. But on top of that, you get to join a live class, get all that feedback while you're going through this, get that pacing. They have to show up every week, right? So it really gets you into that whole groove. Okay. And when you do that, by the way, you could retake these classes as many times as you want, right? So let's say you took this class once and you want to do it again in the future, you could retake it as many times as you want, right? Okay. On top of that, you get 6 hours dedicated live Q&A. You get access to all of our future videos and code. You get help with 2 personal projects. And you also get resume and interview prep if that's something that you're interested in to help you break into the whole industry, right? This one's around it's $4,995, and it's has again 3 and 5 month payment plans available as well, right? If you want to do the project help tutoring plan, which again has everything from self-directed and live, but then on top of that, you could also get our software team to help you out with things, or if you just need a lot of extra time, you want some tutoring, we'll spend that time with you. You get 10 hours of either one-on-one phone calls or software development time on top of everything else. You know, there's a white glove treatment and you get everything with it. And even if we say 10 hours, a lot of times we'll, if we're doing tutoring, we'll even go over 10 hours if you need help with that. We're very lenient when it comes to that sort of stuff, right? And this one's 7095, so $7,095, and 3 and 5 month payment plans are available as well, right? Now, I'll show you the 4th plan in a second, right? But before we do that, there's also a guarantee, right? So if you can't build a bot going through a class, we'll give you all your money back plus $600. I've never seen anyone have to do this. That's why I'm so confident giving this out. Everyone by the end of this class is going to have a bot built, assuming you actually showed up. You will definitely have a bot running on your computer probably by like day 4, right? So if you have any doubts about this, you know, you can get that money back guarantee plus $600 because we're so confident in this, right? If you want to join our live classes, right, and definitely it's our most popular option. Everyone doing the live classes, you really get to be part of the community. You get to really get a lot of help with all this stuff. You know, it's, if you really want to get into it, live classes or project help is the way to go. Our next class starts on September 7th, which is a Thursday, and it's at 8 p.m. Eastern time or 5 p.m. Pacific. It usually runs for about 2 to 3 hours each week, and we're going to be going through all of those parts of that curriculum that I spoke about. We're going to go through all that stuff, right? If you want to do that, you just hit select course, it gets added to your cart, and you'll see basically how to go through that whole process, right? But here I'm adding it to cart, you go through here. If you add more than 2 classes, you get an extra 10% off, right? And then you can go through a whole checkout process, right? So it looks like. But okay, cool. So that's that class. We talked about the upcoming live class, course projects. If you want to learn a little bit more about me, you could read about me here, see me on LinkedIn. If you want to watch some testimonials by past students, we have lots of them. There's a couple here on this page underneath. Latoya, this is someone who didn't have any coding experience when she joined us. She joined us, did incredibly well, built a really complex bot that actually trades off of stuff in Discord. I've heard it's doing quite well for her. But not only did she do that, but she also learned this new skill and got a new job and even increased her salary as well. So she did really well going through this program. You can watch her review here. She talks about everything that she learned in the class and all that. Agim is another one. This is someone who took our class quite a while ago at this point, I think 2 or 3 years ago. Did well, his trading improved. But then on top of that, he also started his own business, selling basically trading signals to people and makes even money on top of that. So he's making more money off his own trading and then also making money giving people trading signals. So he's really been able to take that to quite an incredible degree. He also, by the way, when he joined us, didn't know how to code, right? Didn't know a word of coding and got through it and learned actually a lot from it and actually has used those skills in many other ways too. Renee is someone who did know how to code. So here's 2 people that did know how to code. They went through this, learned a lot about this type of stuff. You can learn about Renee, what he did, or you can also learn about Santayan, who took this stuff and really went to the whole next level. Last time I talked to him, he was making something like 400% a year on his algorithms. Amazing, right? But yeah, you could read his story or listen to his story here, watch his video talking about all that stuff, right? If you want to watch more of these testimonials, you can just go under more testimonials. We have a bunch there. You can go through all of them. There's more on our YouTube. You know, if you're interested in learning about that, you can also check us out on Trustpilot. There's a bunch of reviews out there, right? We don't control that, so it's real. But yeah, there's lots of videos and you can see all of our past students and kind of what they've done. And I think some of these, will relate to different types of people, right? Like if you know how to code, some of these will be more relatable to you. If you don't know how to code, some of them will be more relatable. But there's a mix of a bunch of different people and what they've done after going through our courses, right? Brian says, I see you have a different options course. Would I need to buy both, or does the algo class get into options trading? Same question for crypto. So for the crypto class, we've actually consolidated them, right? So you can buy it separately if you want, but I'd say just take the algo class. You can basically do the same stuff. Crypto and stocks are so similar that you can really work between the two interchangeably pretty easily, right? So we've just combined that into the one algo trading class. But if you really want to go into crypto, you can do that, right? For the options class, we do cover a little bit of options in the algo class, but there's a lot of details to options, right? You think about how you trade stocks versus options, right? You have to think about, your delta, your gamma. You have to think about when is your expiry date going to be. You have to think about, okay, how do you position things? There's so many details to options, so we built an entirely different course on that. Right, so the algo course will get into that a little bit and you'll learn how to do that. But if you really want to get good options, then doing the options class makes a lot of sense, right? Okay, and here's another option, is you could do our all course access plan. Right, so this is a new thing that we just started. If you guys want to check this out, right? This is if you're interested in the self-directed thing, you don't really want to do the live classes, or if you want to do live classes, you don't do on top of this. But here's our all course access plan. And if you read through it, basically what it does is it gives you access to all of our courses, right? So all the ones here, algo trading, options, crypto, AI, all that stuff, you get access to all of it, right? From like the self-directed standpoint, where you get, access to the videos, you get access to the code, right? But on top of that, you also get something called our live algo hour, which I spoke about a little bit earlier, where we basically build a new algorithm every week. You get to be a part of that. You can influence it. You have an algorithm that you want to build, just let us know and we'll build it during that week, right? You get access to all that stuff, right? Which, if you think about it, self-directed for algo trading is $3,000. Self-directed for options is $3,000. Self-directed for AI is $3,000. We're talking about $9,000 there just for 3 classes, right? Instead of paying all that, and then on top of that, our live algo hour is $200 a month, right? So 200 bucks a month plus 9 grand, right? Instead of doing that, you can go for this, which is $500 a month, right? You're going to get access to all these different classes. You're going to get 3, 6, 9, I think like $18,000 worth of classes, right? You're going to get access to our live algo hour, which is 200 bucks a month, right? Where you get to build out these algos and we build them for you. And you get all of that for $500 a month, right? You can go in, there's no commitment, right? So you try it for a month. If you hate it, you can cancel, right? So much less risk, right? Or if you love it, you can stick on board and, you know, work with us for years, right? And we can help you keep building algos. We can keep trying new things. You get to see all of our latest stuff, all of our cutting edge work. And we're going to be adding more and more to this actual thing here, this monthly plan, because this is what we want to get more into as a company where we help you guys long term, right? But this one's only 500 bucks a month. You can add that to your cart. I've shared the link with you here. Again, really good value, right? Instead of paying, you know, whatever, $10,000-$20,000, you can get all that for 500 bucks a month, right? Okay, cool. All right, so that's pretty much everything that we're supposed to go through today, right? Do you guys have any questions around anything that we covered? Right, so Shrog says, thank you, great presentation. I will be in touch. Good night. I have to leave. Sounds good. Have a great night, Shrog. Brian says same thing. Thanks, Robert. This is great. Thank you very much, Brian. By the way, loved all the questions he had. This is fantastic. You know, definitely love speaking with people like this that are very into this. I could tell you really care about the topic. So thank you very much as well. Any other questions, guys? We covered a lot of stuff today. All right, well, if you do have any questions, I'll leave my email, which is rob@lumiwealth.com. Feel free to message me directly if you'd like. There's also on our website, you can book a call to speak with someone. You go under more, book a call, and go there. Speak with one of our staff. They're all very well educated on this thing, can help you out with a lot of different things, right? Yeah, so if you guys are interested, check that out, and let's keep in touch, right? Cool. All right. So thank you very much, guys. This has been a pleasure. Again, thank you as well. And hope to see you guys in some of our classes and be part of our community, right? Even if you don't buy any of our classes, join our Discord, check us out, help contribute to this field, which is growing very quickly and making a lot of people a lot of money. All right, guys, have a good night. Cheers.
Hey, Robert, you still on?
Oh, yeah, Brian, yes.
Hey, just a couple questions for you. Like, I've been trading for like 3 years, really in the past like 6 months, every morning, following kind of this Ripster Cloud EMA strategy and setups. And it's working well for me. And I'm just trying to figure out how to execute better and then how to basically automate some of it, as well as, you know, it's great when there's a down day like the last couple of days that I'm playing puts or doing, you know, playing SQQ and making money, but my long-term portfolio is suffering in the meantime. So really trying to figure out the long-term and short-term like strategies. Really enjoy trading daily. But I'm also, so like I'm looking at Breaking Equity, which I found recently, which is a platform that you can automate some stuff and has integrated back testing, and also Shark Indicator / Ninja Trader. So just trying to figure out, like, again, new to all the algo stuff. I read the book, the Renaissance book, like probably a year ago.
Nice. Great book.
Was in technology. Yeah, was in technology for a long time, not in programming, more in data center, virtualization, cloud kind of areas. And so I understand the power of it all. And I've scripted and coded just a small amount. And I know with Chat GPT and with, you know, GitHub Copilot and some of that stuff, it's not a barrier. But really trying to figure out like what the right path between those three, between you guys, like this shark indicators ninja trader, which seems to have a lot of support like on Upwork with people developing scripts and stuff for it. And then and breaking equity feels like it's not going anywhere, to be honest. I've been kind of researching it and looking in their Discord, and but that's what I'm trying to figure out is like, I know this is the future and it's the way for me to generate wealth. And so just trying to figure out what the right path and what the pros and cons of each of those paths are. Try to figure out if I can really do this, the coding, and get into Python, and if that's going to be enjoyable for me, or if I should team up with like my brother who's a coder, or friends, and that I have lots of friends that are coders, and try to have them tackle some of the coding side, or if it's something I would be interested in, because I'm interested in trading, and I'm interested in like just the analysis and data and pattern recognition and all of those things. I'm not sure I'll be interested in actually coding from that perspective. So I'm just trying to figure out what path to head. I'm going to head down one. I'm just not exactly sure. I like the idea of your community. I like the idea of your pre-built scripts. I like the idea of your background. Like it feels like it's more of a movement in a community than it is just like signing up for,
Exactly what we're doing. I'm
yeah.
glad you noticed. Yeah.
Yeah, no, and I've been on one of these before when I was just really just starting to hear about it maybe a year ago or so. But now that I understand it better, I've done some research and found a trade. Before I was just trading all over the place, like mostly just alerts and doing stupid stuff off Twitter and Discords. And now I've actually found a system, and learning that system and setups, and like, and using it. So that's been awesome. Now I just realized like trying to execute all of it while like, and I know there's so many data points out there and so much happening each day in the market that algos and and computers can do so much better than I can. So that's what I'm trying to figure out.
Sure. So yeah, first of all, I don't know what breaking equity is, so I can't comment on that. I don't know what they're doing.
So it's just it's a cloud platform that has its full, like, you can write, it has its own kind of coding in there. I don't know what language it is. Seems like it's similar to a trading view type language. Has all the indicators that you can back test, you can paper trade, and it connects up with, I have TD Ameritrade Thinkorswim. It connects with that for you to be able to do trading. So it seems like an interesting concept because it's very simple, very easy. But I don't know what the limitations of it are yet. And so I've just been doing some more research on it. I can't tell how active it still is, and how long it's going to be around. That's what kind of worries me about the platform. I kind of watched some of their previous videos, and their Discord seems a little not used, a little dated. So I don't want to put my time and effort into something, but they have like an algo library. I mean, you should look at it actually, because it does pull together a lot of the stuff you're doing in a nice like web interface that brings it all together. Because a lot of people, I'm sure, are gonna have a hard time. I think the barrier to entry, maybe like the coding part of this and the setup and tying everything together and Alpaca and the APIs, I think that's gonna, that it would scare a lot of people away. It's not scaring me away, but it's definitely a little more daunting. Versus like breaking equity that has kind of this marketplace and this nice graphical interface and everything in one place, and you can kind of grab an algo, implement it, back test it, paper trade it, and put it to work. It's interesting. You should check it out. But
yeah, I'll definitely check it out.
I'm just not sure the viability of it, how long it lasts, and if they have any traction. Where I know you guys are a community that are going to continue with this. So that's what is most interesting, I think, for me, for Limiwell.
Okay, cool. Well, I pull it up here. I'm taking a look at their website, right? But I think in general, right, there's a bunch of these out there. You mentioned Ninja Trader as well, for example, right?
Yeah.
A bunch of these. So first of all, we're building tools like that too, right? We've built out, you can see the tear sheets, all the trades, all that kind of stuff. We're also raising money. I don't know if you saw some of our stuff. We're raising like $1 million right now to actually build out a lot of that stuff to make it even easier to do this. More graphics and all that kind of stuff. So we're definitely heading in that direction as well. Right. However, the problem with a lot of the ones that are out there right now, and why we've built our own in our own fashion, right, is that they have their own proprietary languages, right? If you're looking at TradingView, you're looking at NinjaTrader, You're looking at a lot of these ones, they've made up their own language, right?
Yeah.
And basically force you to do that, right? Now, why is that a problem, right? First of all, if you're building something with NinjaTrader, and we have a bunch of developers that work for us, right? If someone asks, people ask, we've built a bunch of NinjaTrader algorithms, right? We've gone
Okay.
through this, right? Whenever we build a NinjaTrader algorithm, we will typically quote something like 3 or 4 times the amount of hours, right?
Okay.
Because it's that much more difficult to build, right? They're using something closer to like a C++, which is a lot less forgiving than Python, and is a lot less intuitive because of their interface that they're using, right? If
Yep.
you're using something like Python, which is what we use, not only is Python a better language overall, right? But you could also use a lot of tools that come with it, right? And the tools are not just made for trading. These are for professionals that work in the field that use this on a daily basis. So if you're doing stuff with like AI or whatever, it's going to be much better at doing Python stuff. You're going to get much
Yep.
better tooling and much better AI stuff. All that stuff is going to work much better with Python, right?
Good point.
That's
Yep.
first of all, right? So it's much easier to build the algorithms, much better tools to use to manage the code, all that kind of stuff. And not to mention, you know, you learn Python, it's actually like a useful thing to use in other areas of your life as well,
For
right?
sure.
Instead of this proprietary algorithm that they made, right? Second of all, because they're using these proprietary technologies, right? Their own coding language, like who the heck does that these days, honestly?
Yeah. Well, I
you
know it looks like NinjaTrader and Shark Indicators is old school, right? It's a Windows download install, like it's
Yeah.
kind of this weird
Exactly.
old school thing. So I definitely was, you know,
Exactly.
definitely was like hesitant because, you know,
Yeah.
I know how challenging that can be and all the updates and all the stuff around it. And I was just literally looking on Upwork to find somebody to write this for me because I'm more of a strategy, big picture vision guy.
Mhm.
I a lot of times fail in the like nitty gritty, like having to go write Python to put this in place where I'd rather hire somebody and have them come write write it for me or something.
Yep.
So
We do
that's
that
kind of
too
where,
if you're interested, by the way.
what's that?
We have a team of developers too, if you're interested in just
That,
doing
yeah, no, I heard that too. So that's why I'm like, but part of me does want to write it myself, learn it so I know how to tweak it, know what I'm getting into, like,
Makes
you know,
sense.
not have any issues or challenges. And I know technology wise, I can accomplish that. I just don't know if that'll take away from, you know, the trading and strategy side that I have so much, I don't want it to become onerous and painful. But anyway, I just wanted to chat with you real quick and because I'm definitely interested in, I want to move forward. I'm just trying to figure out the right path and what that looks like. So I just wanted to talk to you.
Yeah, that makes
Briefly.
sense. You're asking some very good questions, right? So yeah, so first of all, obviously it's going to be a learning curve, right? Like you're not just
Yeah.
going to learn this stuff off the bat, right? Like AI helps a lot, but you're still gonna have to put in time to do that, right? There's no
Yeah.
way around that. We're building, like I said, we're raising money. We want to build this stuff. We want to lower those barriers as much as possible. Every
Yep.
year we keep making strides on that. Our libraries keep getting better. Our code base keeps getting better. We get better at teaching it. Every year it gets easier and easier and easier.
Yep.
I think raising this $1 million will fast forward that, right?
Yeah.
But yeah, it's still a learning curve, right?
Yep.
You have to learn how to code Python, right? It's this, you're not going to get past that.
Yeah. And I started a class, I think it was an MIT online class like 9 months ago. I was like, oh, it's a free class for learning Python. So I downloaded it all, installed it all, started doing some of the coursework.
You're
And I
not
was
going to
like,
find that. You're not going to find that for, you know, breaking indicators or NinjaTrader or whatever.
right.
They just don't teach that stuff because who the heck does, you
But it
know,
was painful. I got to
science?
tell you, like it was painful.
Yeah. Yeah.
But anyway, so that's kind of just, that's where I'm at. I wanted to attend the options thing on Sunday and get kind of a view of that as well. And then
Yeah.
I really want to get started on this in the next week or two. So yeah, I just wanted to connect personally and just get some input from you. Let
Yeah,
you
that's
know
great.
what I'm looking at. So I appreciate the
Yeah, no problem.
presentation and also the feedback.
Yeah, no problem. And one more thing, which I didn't mention, you know, there's a big difference between, like, I think that's a big thing, right? Is that they're using these proprietary coding languages versus Python.
Yep.
The other thing is when you're using their platforms, you're stuck on their platforms.
Yeah.
Meaning 2 things, right? Number one, like you said, if these guys shut down, your stuff's gone.
Right.
If they decide to take your stuff, who says they're not taking your code?
No,
Right?
Well, and I'm worried too, like TD Ameritrade makes an API change and now breaking, you know, equity doesn't, I can't connect anymore. Like So I worry about all those little technology details, which I've seen happen
Absolutely.
in the past, just in my
Absolutely.
career. So like, yeah, I mean, I love the concept of Python and like
Yeah.
more, if not open source, just more, uh, available and universal versus having some proprietary stuff. And I don't think Ninja Trader does options. I'm not sure. I know they're just mostly made for futures, and I think they connect in to some brokers for stock, but I haven't found anything on options.
Mhm.
But because that to me, I don't, I have some capital, but to build wealth, I need leverage, right? And
Yeah.
to me, that's why I'm trading options, and anything else leverage really to build that. And then I want algorithms to manage that other part of my portfolio, because I'm just tired of, watching the portfolio go up and then down. I'm like, I want to be in the market every day unbiased and start the morning like, is it going, I don't know if it's going up or down, and I'm going to trade either way and make a bunch of money. But I hate the fact that I'm making a bunch of money going down and my long-term portfolio is just suffering. It seems counterintuitive to me.
Yeah. Yeah.
And maybe it's just a mentality I have to get over as a trader. But I'm like, man, I'd like my money to be managed smarter.
Yeah, I mean, that makes a lot of sense, right? Like, I mean, if you saw those algorithms, I mean, it's not guaranteed they're not going to go down, but depends
Yeah,
on what you do, right? Like, I mean, there's some algorithms that you'll go down more, right? But
right.
in the long run, you end up making more money, right?
Yeah.
Like with diversified leverage,
I
when there's
love the
hard,
diversified
you get
leverage concept.
harder.
That to me
Yeah,
is like,
yeah,
yeah, it rang a bell. I was like, okay, that makes a lot of sense. I follow Ray Dalio, and just listen to a lot of what he has to say. And I think we're coming up on some really tough times in the next couple of years. And I want to take advantage of the downturn in the markets, and I don't want to see my portfolio just get crushed,
yeah.
uh, or go all the cash and just like, I mean, I think I'm like 50% cash now over the past 2 weeks, because I'm just seeing the long-term, the daily and the weekly charts
Did
for
well. It was good that
SPY,
you were out. Yeah.
QQQ. Yeah, I mean, everything that I'm seeing is not a good picture anywhere in the market, really, right? Any sector, it's hard to find. So I'm like, man, do I just go all cash and wait? But I'd love to have some type of that, something else to leverage, even if it's just like on a daily basis. What we've been trading is, I mean, it's the typical stuff, right? Pre-market screeners, you see earnings reports, you see anything that has lots of volume, and you look for opening signals, you wait for it to get above or below the EMA clouds, and then you can play trades from there, and then just, place your stops where you're at, scale out, scale in. So I really want to look to perfect that and get that automated, with screening out, saying, okay, well, because in the morning we're looking at 10, 15 different stocks, right, that have potential, plus the, SPY and QQQ. So it's like, I can't trade all those, but there are some awesome trades that I miss, that I don't want to miss, and they're crystal clear, right? Drop below the EMAs, stay below the certain EMA, and keep, buy a put at just in the money and let it ride all the way down and scale out when it hits the EMA. Like, that's just a repeatable daily pattern that I'm trading.
Yeah.
So I just want to trade
To be
that.
honest, it's not that hard to code. Like,
Yeah, yeah, it
if
doesn't
you're
seem
if you're like I mentioned in one of our live classes, I think we could build that in like a day.
yeah.
Let's do it one of the nights, just mention it, and we could like actually build that during the class.
Okay.
Yeah.
All right, cool. I won't keep any longer. I just wanted to kind of touch base personally, and yeah, and just kind of tell you where I'm at and go from there. But yeah, if you can send me the info on the Sunday thing, that'd be great. And then
Cool.
next week I'd like to get started.
Yeah, we're gonna be sending out emails soon, so you'll get the emails, you get the texts, right?
Okay.
So if you don't get it, rob@lumiwealth.com. You've probably got a bunch of emails from me anyways.
Yeah,
Reply
I do.
back to it and be like, I haven't gotten this, just let me
Okay,
know.
cool.
But those
All right,
emails
man.
should be coming out either today or tomorrow, but very soon, right?
Okay. Yeah, I appreciate it.
Awesome. Yeah, no problem.
All right, man. Have a good night.
All right, you too. Have a good night. Cheers.